Welcome to Market Momentum, AI and Analysis. Okay, so you've probably seen the headlines, right? Everyone's talking about a potential US government shutdown, and that can make any investor feel a little nervous. But what if we look at this whole thing differently? Not as a threat, but more like a puzzle. And if we can figure out how the pieces fit together, we might just spot some real opportunities. So let's dive in and start solving it.
So here's what we've got on tap. We're going to start by unpacking this whole shutdown puzzle. Then, we'll look at what it means for US markets and the crypto world, which has been making a comeback. After that, we'll switch gears to precious metals. And spoiler alert, it's a totally different story there. And finally, we'll wrap it all up and give you a clear, straightforward strategy.
All right, first up, the shutdown puzzle. Now, when you hear government shutdown, you probably think, oh no, that's bad for the market, right? And that's what most people think. But the reality is, well, it's a bit more complicated than that. There are a few different ways this could go down. And believe it or not, some of them could actually be a good thing for your investments.
Okay, so this is where it gets kind of weird and counterintuitive. You'd think a quick resolution is the best-case scenario. And yeah, that's positive. But check this out. A long shutdown that actually leads to some serious government spending cuts, the market sees that as positive too. The only thing investors really hate is the idea of a long, messy stalemate where nothing gets done. And luckily, that seems to be the least likely path right now.
So you're probably asking, wait, how are spending cuts good for stocks? It really boils down to some basic economics. Think about it. If the government tightens its belt and spends less, it doesn't need to borrow as much money. That takes a ton of pressure off the bond market, and that, in turn, can help bring interest rates down. And as you know, lower interest rates are basically rocket fuel for the stock market. It's like the market is rewarding that discipline.
Okay, so we've established that the market isn't really freaking out about this whole shutdown thing. With that in mind, let's zoom out a bit and take a look at the big picture for US markets. I'm talking about the S&P 500 and the Nasdaq. And you know what? Despite all the drama you hear in the news, things are looking pretty darn good. And it's not just a feeling. The numbers back this up. The S&P 500, it's holding its ground nice and stable. The Nasdaq 100, which is full of tech stocks, is actually showing some real strength, closing higher recently. What this tells us is that the market isn't panicking. It's almost like it's already decided one of those good scenarios is going to play out. So, the takeaway here is pretty clear. Index investing is the way to go to ride this wave.
And this really gets to the heart of the strategy, you know? Why try to find that one needle in a haystack, that one winning stock, when you can just buy the whole haystack? That's what index funds do. Something like an ETF that tracks the Nasdaq 100 lets you own a tiny piece of all those great companies. You get the upside of the market's growth without putting all your eggs in one basket if a single company tanks. It's just a smart, disciplined way to build wealth over time.
All right, let's shift gears and jump into a completely different world, crypto. For a little while there, things were kind of flat, moving sideways. But now, we're seeing some serious signs of life. It looks like crypto is waking up and getting back into a clear uptrend.
So when we run the numbers, our technicals are basically screaming buy for the big three: Bitcoin, Ethereum, and XRP. But hold on, this isn't just about gambling and hoping for the best. And this is key. Every single one of these signals comes with a very specific stop-loss level. What's that? It's your safety net. It's the price you decide on beforehand, where you'll sell if things go south, protecting you from big losses. It's all about smart, calculated risk.
So, let's say you're in. What do you do now? Simple. Let it ride. Seriously, one of the biggest rookie mistakes is cashing out too soon when things are going well. All the indicators are telling us the momentum is still there, it's still strong. So the smart play is to just hold on and let the trend do its thing. Don't be the person who gets off the train before it reaches the destination.
Okay, we've talked about stocks, we've talked about crypto, and things are looking pretty good. But now we need to talk about precious metals. And here, well, the music changes a little bit. We need to be a lot more cautious with gold and silver right now. They're starting to flash some warning signs that we just can't ignore.
So why are we so cautious? It all comes down to this one technical indicator called the RSI, the Relative Strength Index. The easiest way to think about it is like a speedometer for a stock or an asset. If the needle gets way up into the red, like above 70 or 80, it's a sign that it's gone way too fast, way too quickly. It's what we call overbought, and it usually means a price drop, a correction, is just around the corner.
And right now, if you look at the charts, both gold and silver are pushing deep into that red zone. Their RSI levels are getting dangerously close to that 80 mark. And that's a huge technical flag for us. It's basically saying, hey, the party might be winding down.
The easy money in this rally has probably already been made. Trying to jump in now, that's a very, very risky move.
You know, this all boils down to one of the golden rules of investing. It's not just about making money. It's about not losing it. It's about managing your risk. The real opportunity to buy gold and silver was weeks ago, before everyone was talking about it. Chasing the price after it's already shot up like this, well, that's not investing, that's speculating. The risk of a big drop is just too high, so for now, it's best to stay away.
Okay, so we've covered a lot of ground, right? We looked at the government shutdown, the stock market, crypto, and precious metals. Now, let's bring it all home. It's time to put all those pieces together into one clear, simple strategy.
So here it is, the whole strategy in a nutshell. For US stocks and crypto, the light is green. The outlook is bullish. The plan is to stay invested, but do it smartly with clear risk management. For precious metals, though, the light is yellow, maybe even red. The outlook is cautious. The smart play here is to sit on your hands and wait. Don't go chasing prices that are already sky high.
And that really leaves us with one last big question to think about, doesn't it? In a market that's full of noise and crazy headlines, what's really more valuable? Trying to guess the next big peak and get lucky? Or having a solid, disciplined strategy that you stick to day in and day out? I think everything we've looked at today gives us a pretty clear answer. Discipline is what wins in the long run.
Thanks for joining us. Your subscription and likes will be appreciated.